In this video, I'm talking about how to sell stocks short, and specifically why you should have the capability, why you should understand it, and how it works. So first and foremost, I'm looking at Tesla right now. Everyone is very familiar with Tesla. Let me explain what shorting is, and I'm going to use a really easy example. Let's pretend that you have an iPhone, 17, and you have two of them in the box, never opened, never before used. And I'm your really good friend, and I reach out to you and say, hi, can I borrow your iPhone 17, please? And you say, yes. So I borrow your iPhone 17, brand new in the box, and I turn around and sell it on eBay for $6,000. The question is, did the person who bought it from me on eBay, are they happy? The answer is sure, because they have a brand new iPhone, they spent hard-earned money for it, they get to talk about it with their friends, they get to share it with their people, all that kind of good stuff. Mathematically, though, I am currently short one iPhone. So what do I have to do in order to fix that equation? Well, if I sold the iPhone for $6,000, I'm plus $6,000, but I am short one iPhone. So what I need to do is go back on eBay and buy one of those iPhones, finding it somewhere, hopefully, maybe. And if I can buy another iPhone for $5,500 and return that iPhone to you, well, you're happy because you got your iPhone 17 back, right? You got two of them, so you're pleased. And I made the difference between $6,000 and $5,500. I was making the market. That, ladies and gentlemen, is exactly and precisely what shorting is. Except in this example, what you do is you sell stock to a willing buyer, someone who wants to own it, and you borrow it from a broker. So now, in the example of Tesla, if you sell stock short, you are selling something that you do not own, right? But you are selling something you do not own to someone who is a willing buyer of that thing. So when you sell stock short, money comes into your account, right? Money comes into your account, you're happy, you're pleased, and then you take that money, which you were given because you sold it to a willing buyer, to buy the stock back at a lower price. When you buy the stock back at a lower price, or maybe even a higher price, it returns the stock back to the broker, is who you're borrowing it from, right? You return it back to the broker, and the difference is the net proceed of your profits. All right, so let's look at what that looks like in an actual broker. And what I'm going to do is pull up two. I'm going to pull up TD Ameritrade, and I'm going to pull up Thinkorswim, just to show you how easy this can be to facilitate. So here is a real money account in TD Ameritrade, and this is all you have to do. When you are setting up your account, you do have to select a margin account, and then the action becomes sell short. Boop, there you go. And then quantity, or quantity is the amount of shares that you would take on whatever position it is. Symbol would be whatever you're trying to short. And of course, if you're selling something you don't own, you want to sell it as high as possible. You always want to short as high as you possibly can, because when you're shorting, you are selling something. When you sell something, you want to sell as high as you can and buy it back as low as possible. So right now we can see that Tesla's trading at 746. So if we were trying to sell it short, we'd probably try to get it 747, which is higher than it is now. If we sell one share of Tesla at 747, you'll notice estimated amount positive $747. That's how much money would come into our account. And then if we buy it back for less than that, we take the net proceeds. Now I'll show you here on Thinkorswim. So Thinkorswim is an actual live trading platform that I could look to sell short right now. So what I'm going to do is actually a real live $100 trade, and I'm going to look to sell Tesla short at 748, and I'm gonna have a stop at 749 and a target at 747. I'm gonna go ahead and select this trade, and here's exactly what it looks like. This is a real live trade where I'm either gonna lose $100 or make $100 right in front of you. So what I'm doing is I'm selling it to a willing buyer. Now this transaction can happen in just a few seconds, so we're gonna watch and find out what happens. This is gonna be either a real $100 win or a real $100 loss, but there's no other additional risks. It's the exact same risk as buying a stock. If you buy a stock and it goes down, you lose money. If you sell a stock short and it goes higher, you lose money. If you sell a stock short and it goes down, you actually make money. which is amazing because it doesn't matter the direction of a stock or an asset class. If you have the ability to make money if it goes down, you take advantage of that direction. If you have the ability to make money as it goes up, you take advantage of that direction. But as far as having an actual order placed, you can have a stop loss and a target, just like you can see right here in this account on any trade. You can do it on a long trade, which most people are familiar with when you're buying a stock, or you can have it on a short trade. So there we go. I'm out. That was a $100 loss. But the reason I'm showing you that trade is because that's how simple it is. It doesn't have to be aggressive. It doesn't have to be scary. It doesn't have to be terrifying. If you're looking to short a stock, what you simply have to do is know that stop losses are important. You have to know how to calculate your risk. You have to know how many shares to get into the trade. But once you understand the platform, once you understand how to navigate this, it becomes extremely, extremely amazing and a phenomenal tool in your tool belt to be able to short a position, because shorting stock allows you to make money in any market direction. So if we go over here to the daily chart on Tesla, you can see that Tesla's gone from 1,100 down to 700. If you shorted 100 shares at 1,100, you would have brought in $110,000. And if you bought back Tesla at 700, you would have captured a $400 per share profit. And if you did 100 shares, that would have been a 100 times 400 is $40,000 profit on Tesla going down. So again, extremely important, massively crucial, and totally beneficial to be able to short stock. And ladies and gentlemen, that is exactly how it can be done. I would love to teach you more of this insightful information at our website, reallifetrading.com. I will teach all of you for free more information. If you click the beginner trading process, you can go through this entirely complimentary, and you can learn more about risk, about entries, about stops, about how to calculate your share size. But it's extremely valuable and massively beneficial for you and anyone else watching this video to learn how to short stocks. I hope this was helpful. You rock. Goodbye.